Here's what investors are starting to think about. The American tariff on imports from China is now more than 40%. Now that's a lot less than the 145% it was going to be on April the 9th, when President Trump woke up and decided to pause all tariff except on China, which would get an extra 125% on top of the existing 20%. Now, China did a 125% tit for America's tat, and that lasted for a month until they agreed to back off. But it's still 40-something%, and that's still a big spanner in the works of US-China trade. So miners got sold off today, and so did the banks. The little Aussie drone fighter, Drone Shield, did its best to lift the mood. Its share price has now climbed 75% in 2 weeks since it announced a big defence contract in Europe. The US market fell a bit last night, but most Asian markets rose today, and on commodity markets, gold and iron ore fell, while oil and copper managed small gains. And the Aussie dollar eased a few points, but for the moment it remains ensconced in a 6-month-long uptrend caused by the declining US dollar. A couple of interesting housing charts arrived in my inbox today from the Bank of Queensland. Australians have a clear preference for houses over apartments and units, and this chart of the ratio of their prices shows a long-term willingness to pay more for houses. And this one shows the ratio of house prices in the bush versus the cities. Now, while the long-term average trend is flat, the last decade has seen a big relative increase in regional prices as city dwellers try sea and tree changes to get a place they can afford. And that's finance.